It's the Traders Podcast, episode number 23. And I am your grateful and appreciative host here, Jeremy Hritz. And you know what? I talk a lot with my hands. Somebody made fun of me about that one time. You know who you are, my good friend. So I'm going to try to rein that in a little bit today, but very excited to be joining you for episode number 23. I've got my notes here. And the topic for today is the importance of long-term planning in terms of successful trading. You know, I'm primarily a day trader. I am in and out of a trade within a few hours, 5 days a week. This week there was only 4 days a week. But you get the point. They're quick trades. However, what needs to be understood is I am looking for setups every single day. And I know what my conditions are, what I want in a trade, but it may not happen month and a half, 2 months, 3 months down the road. And that's where preparation and planning comes into play. And I'm going to talk about all that in relation to day trading, swing trading, long-term investing, options trading, and how the really significant shift that you need to take in order to level up your trading. It all comes down to planning and preparation. So that's going to be our topic for today. We're also going to get into Ask a Trader, and I'm going to tweak the intro. Done with the done with the guitar intro. I'm going to do something else here today, and then we're also going to take a look at Mr. ROKU to see how he is performing or underperforming, as has been the flavor of the quarter. So we've got a jam-packed episode. And before getting into Ask a Trader, just want to thank everybody for being a part of Courage Pays Better Than Fear Trading. You know, I just launched this in January, and we are growing at a steady, strong pace. And I'm super happy to be working with all my coaching clients. So thank you for the energy and enthusiasm you bring to those sessions. And to everybody who's been signing up for the courses, we just finished Profitable Options Trading. It was so much fun. And we kick off the Day Trading Bootcamp this coming Monday, June 3rd. The last day to register for that is Sunday. That'll be linked in the show notes if you haven't signed up for that yet. Make sure you do. This is the first time I'm teaching this class, and it is going to be packed full of everything you need in order to be able to day trade the market successfully. So click that link, register if you haven't. And so without further hesitation, let's get into it. Ask a Trader. All right, so it's time for Ask a Trader. I've got 3 questions here to get things going. And the first question is, Jeremy, lots of selling this week. Does this mean that there's an impending crash in the market? What say you? So look, you're always going to have doomsayers out there who believe that the market is going to crash. It doesn't matter if you're in a strong bullish trend. It doesn't matter if you're already in a bearish trend and things are going down. You're going to have people out there who just believe that the stock market's going to go to zero. And historically, and I always do this exercise with students that I coach, that if you just zoom out on the SPX chart and go back to the inception of the SPY, you could see that the start of the stock market till now, it's gone straight up. Markets are designed to go up, okay? And despite selling, despite pullbacks, despite bear markets, despite market crashes, things will resolve themselves and will bounce back higher. Now, right now, we are getting some selling that's coming in. We made new all-time highs on Kohler CPI data a few weeks ago in the month of May. And then NVIDIA earnings pushed us up a little bit more. And then we've been selling off since that point. But listen, that's completely natural because people are taking their profits, which is what they should do. And so now you're seeing selling, you're seeing stocks drop. And potentially it could be a correction, right? 10 to 20%, maybe more. Or it could be 5 to 6% correction, just a little bit of a dip before people buy in and take this thing higher. So is it a crash? Nobody can say for certainty that something's not a crash or is a crash because nobody has a crystal ball, and the market's going to do what it's going to do, right? And it's not about us predicting what the market's going to do. It's about identifying, hey, here's the pattern and trend that I see, and I'm going to ride that wave like a surfer and take advantage of it and profit from it. So, and my thoughts, do I see a crash? No. This is just a healthy pullback. I wouldn't be surprised to see us pull back to the lows that we made just a little while back in April when we had that military tension between Iran and Israel. And then I expect us to bounce. Election years typically are bullish, but we are going to get pullbacks. It's natural. There's nothing wrong with it. But I still think there are legs left in this bull market. So we'll see. Jeremy, you talk about how you only focus on 4 to 5 stocks and that's what you recommend to newer traders. Has that expanded for you and do you look at more? And the answer is yes. I always recommend to people just starting out trading to just look at a handful of tickers because you want to specialize and be a master of those particular stocks. Okay. And you don't want to start out with too much because it's going to make things too complicated. You're going to have too much to pay attention to, and it's going to bog you down, and it's going to lead to you not being profitable. Okay. So you want to start with less. However, the longer that you're doing this, then you could start scanning tickers. And with your methodology for how you find good values using your moving averages or using chart patterns, whatever it is, then you could expand that list. So yes, I actually do scan and look for stocks on daily and weekly charts that are in good value ranges that are due for bounces that I'll take on swing trades or I'll do quick little scalps on. So yes, that has grown and expanded. However, I will say that I have my list is about 10 to 12 stocks now that I look at every single day. And I know how those stocks move, how they fluctuate, how the news impacts them, but I do look at more. Point to really drive home here, though, if you're just starting out, focus on your handful of stocks. After a couple of years of doing this, you can expand, but don't be in a rush, right? Focus on making money. That's where we want to start. And then the final question, Jeremy, if you had a chance to start over as a trader and redo your journey, what is one thing that you would do differently? I would hate. I really don't want to say I would do anything differently because I'm very happy with where I am. I'm constantly striving to get better as a trader and investor. I've learned some very expensive mistakes along the way. But I often think about if I hadn't made those mistakes, then I wouldn't be in the position that I'm in today because everything's going to have, there's an effect for every cause. There's a cause for every effect. But if I had to pick one thing, it would be not trading real money when I started this gig, right? Because I started right away. I didn't paper trade it and practice trade. It was bam, let's go. Let's get into this. Let's start putting real money on the line. And, I lost a little bit of money, not a ton of money, but, I would have liked to preserve that. But then there's the flip side of that. If I'd never have done that, I wouldn't have had that $284 Snapchat trade that really just transformed everything for me. So if I would point at one thing, that would be it. But at the same time, I'm kind of hesitant to say that I regret it because it helped me get to where I am. So I'm grateful and thankful for the mistakes. Still making them today, still have losses, had a loss today, right? To close out the month. That's going to happen. But they're all part of the process. They're all part of the learning. The problem is when you're not learning from your mistakes and you just keep doing the same thing over and over again, that's where you need to have a hard pause, stop, and fix your system. And honestly, what it's going to come down to every time, it's a matter of your discipline and controlling your emotions. Trading is not very difficult from a technical standpoint. It's all here. It's all mental. And more than likely, if you're struggling, that's where it's stemming from. All right, so that's Ask a Trader for this week. And now we're going to get into our topic of planning long-term, why preparation and being patient is key in terms of taking that next step as a trader. As I said at the beginning of the show, we think of day trading as, all right, I look at a chart, I see where I'm going to get in, I get in, boom, I'm out, and that's it, that it's really fast and that we're just looking at the charts and making decisions right there on the spot. But there's another part of that that you don't see, and that is, for me personally, I am constantly studying the charts of those stocks that I follow, those 10 to 12 stocks. And every day at market close, I'm studying how the candle closed. I'm looking at previous price action to see how the stock has interacted with moving averages. And I'm forecasting out based on where the current stock price is, what I see transpiring. And I'm also taking into account what's happening in the broader markets, what's happening with economic data. But when I'm sitting down to trade a particular stock, this is something that I've been thinking about for a period of time. Okay. And one of the strongest things that I use is those moving averages on the daily charts. When I see stocks pull down into a significant support, I know, or if I'm anticipating it, I know when I see that happen that I'm looking for a bullish day trade in that particular range, right? The same thing is true for whenever we get into resistance areas. If I see that something is climbing, it's getting extended and it's hitting a resistance, then I know that, hey, there's a good opportunity here for a bearish day trade on a short. Okay. But these things aren't just happening. Hey, I look at the chart here in the morning before the market opens and I know what to do. No, this is something that I'm doing every single day. Now, I'll take some time off on the weekends to relax. But market closes at 4 p.m. Eastern. I look at how those candles closed. I get my edge for the next day in terms of how I'm going to trade it. And then I'm thinking out weeks, sometimes months in advance for what I see transpiring. And then when those conditions are met, I'm prepared for it and I could take advantage. Meta is a great example right now. It's been bouncing off that 100 simple moving average on the daily chart. Now, today's a little bit of an exception. It's gone below that. But what we see, if we just look over the past few weeks, every time that it's come down and hit that 100, it has bounced. So I've been using that to my advantage for day trades, and it's been very profitable. Okay. And so when you see patterns like that and you plan for it and you wait for that to occur again, you could take advantage of it and use it to become profitable. And you can use this for swing trading. You could use it for options trading, investing, where you're, let's say, for instance, if you take a look at Nvidia right now, it is so far extended. It's in an all-time high. It's getting ready to split. What happens when things get to all-time highs? They pull back because people take profits because they know that, hey, this thing isn't going to stay up here. It's not just going to keep going straight up. Although Nvidia, it's a beast, right? That's what it does. But we can plan and say, let's say that we want to own a position in Nvidia. We can plan in advance to say, hey, these are the key areas where I want to purchase Nvidia, and I'm okay at paying this price. And it might be far away from that, but you can wait and be patient to say, all right, when it gets down close to its 10 EMA because it is so far extended, or it's 50 SMA, or it's 100, whatever, based on your chart study, that's where you begin layering into the trade and purchasing your shares. But again, having a thoughtful, meticulous process for that is going to put you in a better position for your trade than just YOLOing into something when it's at an all-time high, right? Because the newbies are jumping into trades when they're extended, when they're overpriced. You don't want to do that. That's how you lose money, because then you get in at the top, the thing drops down because all the smart money is selling their position, they're taking their profit, and then you're left holding the bag. You don't want to do that. Now, it's not just as simple too as when it pulls down into support that you immediately buy. You want to see how it's going to interact with that support. So also be cautious of that. But again, that's where having your plan is vital. It's important. And when you have a plan and when your conditions are met and then you execute it, you're going to have better trades as opposed to, hey, this looks good today. Let me do this. You should go into each day as a day trader or swing trader, options trader, even an active investor, with an idea of what you're looking for in terms of setups. So you should know that, hey, based on my chart study at the end of the day, and I'll know this today, I have a play that set up for Roblox. I'm watching AMD for a little bit more of a bearish breakdown before move higher. And I'm watching Netflix for push to 700. I'm just throwing out hypotheticals. These aren't real setups that I'm looking at. But you should have that edge and that plan based on the studying that you've been doing over time. It's just compounded knowledge. And then when Monday comes, you're going to take a look at those. You're going to find what is the best setup out of those three. And then you take the best one and you approach it. That's how you do it. It's not just, hey, let's hit a button, let's trade this. That's how you lose money, right? So you don't want to do that. So you want to plan long term. And really, it just puts you in control and it forces you to be disciplined because you're basically saying that unless my conditions are met, I'm not taking the trade. And that's where you want to get to where you might miss something that runs, but that's fine. When you have that discipline to only get into trades where you want to get in, where your conditions are met, that's when you really take that next step as a trader. And then I'll close with this because this is something that you can apply this to. So a lot of times we'll see big, massive moves on earnings for companies, right? And we're coming up on the tail end of the most recent earnings season. And this hasn't been a great earnings season for me. I'll typically play, some of the key tickers over earnings. But the next round of earnings is going to start in July. And so now, as we're getting ready to shift into the beginning of June, now is the time to start planning how you want to play those particular companies in terms of their earnings calls, right? You don't want to just play earnings in the few days leading up to it. You want to plan in advance, which goes along with this whole concept. And if you want to take it a step further, the next earnings round after that starts in October. So if you really want to plan, you really want to prepare, you really want to do some in-depth study research so that you're ready to capitalize on those earnings plays that are coming up, you could start now preparing for October. It's all about the preparation. It's all about the long-term view. It's all about your study. And when you can make that shift from just being reactive, hey, whatever it is today, let me go trade this. When you make that shift to slowing things down and you're waiting for what you want, that's when you will take that next step as a trader. And so hopefully that provided some value for everybody out there learning this beautiful thing that we call trading. It's life-changing. And with that said, we are going to take a look at Mr. Roku, but I have to put on my chart study glasses here because when these things are on, I'm just seeing things that are just marvelous, right? I'm able to have that insight into what's happening in the market. So we're going to pull up Mr. Roku, and oh, it is not looking good for Mr. Roku. Let me share this guy here. Share. Here we go. Enter full screen. Oh man. So here is Mr. Roku. Let's go over to daily chart and we can see it's just more of the same. We had the gap down in February. We gap down again. We still have two unfilled gaps above us. Went sideways, dropped again, bounced, dropped again, bounced, dropped again. And one thing that was unique this week, first of all, we got back down below COVID lows. You could see the COVID 2020 lows here. And you could see with this candle here, we almost made a lower low. Because if you go back and just take a look, Roku has been making higher lows since 2022. That shows that the trend is reversing because this thing was way up there back when interest rates were low. And had we have set a new low here, that could have been indicative of a trend change. But notice how it bounced perfectly right at that price point where it did this past October. Now, does it mean that this thing is going to bounce and fly? No, this is Roku, right? This is what Roku does. And until we see strong closes, multiple days of strong candles and increased volume, you can expect more of the same here. And so this thing is by no means out of the woods. It's got to protect this area. If it breaks this, then we're going to start coming down and retesting the lows of May of last year. And then if it breaks that, I mean, we could start coming back down into those December 2022 lows when we were in a bearish market. So, it doesn't help that Amazon, so here's a headline, Amazon rolls out AI-powered search features for Fire TVs. It's Fire Sticks, which compete with Roku, so that's not good. Amazon obviously has many more resources than Roku does. And so not sure what this is going to take. And if you just zoom in here and we look, 1, 2, 3, 4, 5, 6, 7 out of 8, 9, 10, 11. 7 out of 11 days it's been bearish, it's been selling off. So it's got to find some support here. It's got to push higher, or we're just going to continue to go lower. But the key area to watch here is that the bottom of this wick, that 55 mark. If it breaks that, it's set a new it's broke those higher lows, it's set a lower low. That's not good for the stock. We'll see some droppage, right? So the only thing to keep in mind is July is typically a good month for Roku, where it does see a little bit of a bounce. And so we're getting close to that. Its earnings is going to be July 25th, and we'll see. And the other thing that's not helping it is that the rates are not being cut by the Fed. So as those rates are staying higher, it's hurting businesses like Roku. And until we see a change in that, we're going to see more of this. So that's a little take on Mr. Roku here today. We'll see what happens. And this was shaping up yesterday. This was like a hammer. This was a hammer candle on the weekly chart, but you can see today that's not that's not happening. It is not. This is an indecision candle right now, leaning more to the bearish side. So it's not looking good. Not looking good for Mr. Roku, and that seems to be the consistent sentiment here when we take a look at this. We're gonna have to pick another stock, right? No, we gotta stick with it, because we will have a party the day that this thing breaks out. So maybe we'll even have like a contest or something. Anyway, ladies and gentlemen, that's going to do it for episode number 23. Got to take out my chart analysis glasses. Episode number 23 of the Traders Podcast. My gratitude and appreciation to all of you guys out there. Thank you so much for being a supporter of the show. Like, subscribe, comment. Please share with your family and friends. It helps me grow the site, get this information out there to help people who are aspiring traders. Don't forget about the upcoming day trading bootcamp. I would love for you to be a part of that. And if I can help you in any way, just reach out to me, couragepaysbetter@gmail.com. DM me on Facebook, comment on this video. I'm here to help you. So with that said, have a fabulous end of the month. Let's get ready for an amazing June. And I will see you on episode number 24 of the Traders Podcast. Take care, everyone.